But the questions during this presidential campaign are, how much will I have to pay? And what do I get, if anything, in return? Well, the left says John McCain's tax plan favors the wealthy. The right says Obama's plan would scare investors, smother business, and make the economic crisis far worse. How do both stack up to the tax policies of the current White House occupant? Well, Ryan Ellis is the director of policy at Americans for Tax Reform. That's a conservative group that opposes tax increases. I want to start, Ryan, by putting up on the screen so our viewers can read it, and I won't read through all of them. Here's what Obama would do on tax cuts. Focus on the bottom one, raising taxes on families making $250,000 and more. Obama claims only 5% of Americans will see an increase. I checked that with a nonpartisan tax policy center. They say it's laughable. They say his plan will hike taxes for a full 20% of households. What say you?
Well, the important thing to keep in mind is that those households that we're talking about, those households making more than $250,000, two-thirds of all small business profits exist in those households. So there's no way that you can raise tax rates on those households without raising taxes on the bulk of small business profits in the United States.
When Obama says 95% of the American people will see taxes go down, is he telling the truth, in your judgment?
Well, I mean, it depends how you slice the numbers. I'm personally, and in Americans for Tax Reform, we're a little skeptical that he can come up with all the money he needs to pay for his government spending programs while exempting 95% of households from any sort of a tax hike. We heard that from Bill Clinton back in 1992, and every American, because of the gas tax hike and some other things, saw a tax hike in 1993 when President Clinton came into office.
Sure.
So we're a little skeptical of that, but what we're really focusing is that even if you take him at his word, that's still a massive, massive tax increase on the small business sector, and you have a marginal tax rate on most small business income that would approach 50%.
Let's go to the next full screen. Here's what John McCain would do. Essentially, he wants to maintain the current Bush tax cuts. He insists this plan will not increase the tax burden on anyone. Is that true?
Oh, that's absolutely true. Senator McCain is basically saying we don't want to have a tax increase on anybody, and in fact he's proposed several additional tax cuts on top of that. He wants to bring the corporate income tax rate from 35% to 25%, which would be in line with our competitors in Europe and around the world.
Does it favor the wealthy?
No, it doesn't favor the wealthy. If you cut marginal tax rates, this isn't about rich or poor or middle class. This is about making the economy grow faster. It's about making wages grow faster. It's about creating jobs. And the only way that you're going to do that is if you cut taxes on work, saving, and investment. If you tax something less, you get more of it. If you tax work, saving, and investment less, you're going to get more of it.
All right, let's put the next graphic up on the screen. Here's what Obama's new tax proposals would do or be. Half of all taxpayers, Ryan, pay no income tax at all. Will Barack Obama actually be giving money to people who are not paying money?
Absolutely. The Tax Foundation has some very good research on this, and they found that about 1 out of 3 people filing a tax return, 1 out of 3 households filing a tax return, do not in fact have an income tax liability. So it's literally impossible to give a tax cut to 95% of people when 33% of people don't have an income tax liability today. What he's doing is using something called refundable credits, which are really nothing more than spending. That's the way they're going to be scored, and that's really what they are. It's the government writing a welfare check to people that don't have an income tax liability.
Ryan Ellis, Americans for Tax Reform, thank you very much.
Thank you.